Zero Hedge has an article, Richest Americans will control 70% of country's wealth in just a few short years by 2021, BCG says. Really? Well, if you've ever looked at any the charts that shows the top 1% or 0.1% even, and then the rest of us, used to have a healthy middle class and a decent sized wealthier class, in also a super rich class, but it was never like out of control like it is now. So I think there's certainly something to this. Being rich is great, but being rich in America, that's even better. With U.S. stock benchmarks trading just below record highs and treasury yields not too far from the all-time lows reached last summer, the gulf between the world's Gulf. Did you mean the gap? The gulf between the world's wealthy elite, those 18 million households worldwide with more than 1 million in assets, and everyone else, is rapidly widening. According to a new study by Boston Consulting Group via Bloomberg, these houses or households with a total headcount of roughly 70 million people, or about 1% of the world's population, control 45% of the $166.5 trillion in wealth. By 2021, they will control more than half, suggesting that while the wealth inequality in the rest of the world is simply accelerating, in America, it's gone into overdrive. Right now, 63% of America's private wealth in the hands of U.S. millionaires and billionaires, BCG said. By 2021, their share of the nation's wealth will rise to an estimated 70%. What is this? Page unresponsive. Page unresponsive. The North Pole. Papa Elf. Hang on. Let's try that again. And there's actually a chart. That's what I was trying to click on, and that messed me up there. Here it is. The U.S. wealthy lead the world. Share of private financial wealth controlled by millionaires and billionaires by region. And honestly, it's not so much the millionaires. It's the billionaires. So worldwide, and then the U.S. top dog, of course. Quick. Look surprised. Let's continue on. The share of income going to the top 1% in the U.S. has more than doubled in the last 35 years, after dropping in the decades after World War II, when the rich were taxed at high double-digit rates. The tide shifted in the 1980s under Republican President Ronald Reagan, a decade when trickle-down economics saw tax rates for the rich fall, union membership shrink, and stock markets spike. In its report, BCG puts the global rate of wealth creation in 2015 and 2016 at 5.3%, though the consulting firm expects it to accelerate to about 6% annually for the next 5 years. Those gains will accrue almost exclusively to the wealthiest Americans, while wealth held by everyone else will just be barely growing. Of course, there's a caveat. In America, most of these gains exist only on paper. More than 70% of new wealth creation is derived from the rising value of rich investors' portfolios. The rest is what BGC describes as new wealth creation, aka real money earned by workers and entrepreneurs. Globally, the share derived from asset valuations fall to about 50%. Quote, in the U.S., the creation of new wealth is a minor factor, making up just 28% of the nation's wealth increase last year. It's even lower in Japan at 21%. In the rest of the Asia-Pacific region, meanwhile, 2/3 of the rise is driven by new wealth creation. End quote. The richest Americans could receive an additional bump if/when President Trump pushes the fiscal agenda on which he campaigned through Congress, an agenda that includes tax cuts, deregulation, and trillions of dollars worth of new infrastructure projects. However, since the exact details of these policies are not yet widely known, it's difficult to predict their specific impact, BCG says. No one knows what kind of tax changes will become law, said BCG senior partner Bruce Hawley. However, this could buoy the growth in U.S. wealth that we are predicting. America remains home to the highest concentration of millionaires and billionaires in the world, and their ranks are growing fast. Today, about 7 million Americans are worth more than $1 million. BCG expects that number to balloon to $10.4 million by 2021, which would mean that about 7 million Americans that are worth at least $1 million, that would be 7 million Americans that are worth at least $10.4 million by 2021, an annual growth rate of 8%, or about 670,000 new millionaires each year. China has the second most millionaires and billionaires at 2.1 million, though its population is 4 times the size of the U.S. Within the U.S., glaring disparities exist from region to region. As Fortune reported back in 2015, roughly 2/3 of America's millionaires and billionaires live in 12 metro areas, mostly wealthy enclaves along the coasts. Meanwhile, according to the Federal Reserve's latest survey of household economics and decision-making, 1/4 of American adults cannot pay all their monthly bills, and 44% have less than $400 in cash in hand in case of an emergency. So, speaking of the millionaires and billionaires that live in 12 metro areas, mostly wealthy enclaves along the coasts, when a hurricane or flood event happens, and these multi-million-dollar homes are wiped out and damaged, who pays for that? You and I. How did, J-Snip, what do you mean you and I? I'll give you a perfect example in Florida. A little hurricane comes through. All of a sudden, your rates go up. Even if it didn't damage anywhere near your county, your city, it was, 400 miles away in Florida. Complete opposite side of the coast of me, down near Miami and 300 miles away. Well, the insurance company has to pay for that, and it's going to cost them a lot of money. And they don't like spending that kind of money all at once. So with the state's approval, of course, and permission, which is always granted, matter of fact, it's usually in the law already, we reserve the right to raise everybody's rates because we just took a big hit down in Miami. Oh, I'm sorry, excuse me, I didn't make a claim on my house. There's nothing to claim on my house. There's no damage to my house. I didn't do anything wrong. Say that again? Yeah, we reserve the right to raise everybody's rates because of this big payout. Oh, wait a minute. When hurricanes come in, generally speaking, not even generally, always, whatever coast they come in on the coastline, there's the most severe damage, correct? Absolutely. Why? Because open water, there's nothing slowing the storms down. They build up and build up and build up until they finally hit land, trees, buildings, etc., and they start slowing down. Of course, the biggest brunt taken on the coast. Why? Because that's where the rubber meets the road, so to speak, right? So their houses get wiped out, and they've got multi-million-dollar houses, and they're all up and down the effing coast. And every freaking house up and down the coast is at least probably, $1 million or so. And there's a number of them. So you and I, again, have to foot the bill. Taxpayer bailout. Kind of like the hidden gasoline tax. You pay a certain amount at the pump, but the government's actually taking a nice chunk of that as tax money. Gasoline, the hidden tax. And so when gas prices rise, the government's, portion rises with it. I believe. I'm not sure if that's the way it is in every single state. But so yeah, it's the old saying: the rich get richer, the poor get poorer. But see, we used to have a healthy middle class, where if the rich got rich and the poor got poorer, well, most of us, we're the middle class. Who cares? Didn't happen to me, so I don't care. I'm not rich, so I don't care. I'm not poor, so I don't care. I'm middle class, right? That's how we all think. Didn't happen to me, so I don't care. It's not bothering me, so I don't care. Oh, now it's bothering you. Why is it bothering you? Because I used to be middle class. Used to be middle class, and now I'm not. I'm becoming lower to poor. Lower middle class, maybe. It may be because I'm just telling you that, because I'm pulling one of my mom's famous sayings. I refuse to live in poverty. So, since I refuse to live in poverty, I'll just tell myself that I'm lower middle class now. When in reality, you're getting poor. Again, are you one of the ones? Just ask ourselves this question. A quarter of American adults can't pay all their monthly bills, and 44% have less than $400 in cash on hand in case of an emergency. Is that you? Is that me? I'll be honest, it's not me. I got a good paying job still. Thank God for that, right? Got a little bonus coming in every month from YouTube. Thanks to my people. Thank you very much for those video ads that play. Thank you so much. But I understand these numbers, and I can see it. And I'm reporting on it every day. And I know there's this massive, massive gap between the rich and the poor. It's almost, you know how the seasons, we have 4 distinct seasons: winter, spring, summer, and fall. All you got to do is come. No. Think of the seasons of the poor, lower middle class, upper middle class, and then wealthy. So kind of 5. Turning into literally a couple of seasons. Rich, season 1, and the other season you get is poor. It's the rest of us. Even though they do kind of vary greatly from dirt poor to just kind of poor. All of which everybody, whether you're dirt poor or poor, or lower middle class for the most part, are you living paycheck to paycheck? Please check this box. Oh, the middle class, check that box. The lower middle class, check that box. And the poor and the super poor all check that box. So what does that mean? It means we all got a major problem. It's kind of the same. We ain't got enough money to spread around every month. And but the rich certainly do, and they're getting richer. And again, with Donald Trump's tax breaks, where are they going to go next? Which again, I appreciate what he's trying to do for everybody, but there's going to be an indirect effect to the super wealthy too, that are going to, oh yeah, we love Donald Trump now. Yeah, he's going to make us even richer than we are. Well, but it's a trickle down. It's trickle down. The rich and their corporations, everything they own. There's a whole lot of rich people that don't have that. And even if they do, they don't decide one day, because I feel sorry for the slobs, the useless eaters, as they like to call us. I'm going to hire a bunch more people just because I can. And instead of paying, getting $2 billion a year salary, I'm going to hire, a few hundred people. Nah, I'm going to keep the $2 billion salary and screw the 100 people I can hire. That's a business decision. I'm not hiring people I don't need. I'm not wasteful. I don't want to be a wasteful billionaire. I don't want to hire people I don't need, 200, 300, 400 new people. Forget them. They'll find a job somewhere else. No. Matter of fact, I'm replacing some of my other people with electronics and, robots and stuff. All I know is I can tell you with pretty good certainty, I don't think this is going to end well one way or the other. I really don't. Again, that's why I hope you got your precious metals. You got your cryptocurrencies. I hope you're taking some of the profit. If you're flipping currencies, cryptos, and buying and selling, you're playing the game. If you don't have any metals especially, or you have a few metals, like as in gold and silver, you seriously need to think about taking some of that cryptocurrency profit, even though it may be early. It's great profit the way it's been, and flipping a little bit of that into precious metals. You really should consider that, and keep those precious metals in your possession. So if you do want to buy some precious metals, I got a spot for you. But in the description box of this video is the link, sdbullion.com/jsnip4. They are giving my subscribers a special deal. You get a 10-ounce silver bar, Proclaim Liberty silver bar at spot price. And right now where prices are, oh my God, is it time to buy. It's for new customers only, but do it if you want. Buy some more if you already have some, if you're low, etc. If you've met your goals with precious metals, again, I can't complain or tell you, oh, get more. If you met your goals, you're satisfied with where you are, fine. Now you want to play with the cryptos, you want to play with something else, I get it. I'm doing that. I'm pretty much tapped out on my silver purchases right now. I feel like I'm done. My buddy Jason wanted to get in on these cryptos and just couldn't pull some cash together for some other certain reasons. And he has a little stash, has a stash of silver. And I told him and said, look, in your case, because I know where these cryptos are going, and even if you want to flip in and out quickly, you can do so. I was like, but I'll know just a little bit, I'll know a little bit of your silver. in your case only, because of the reasons why he couldn't come up with the cash, which I'm not going to get into in this video, personal matters. But the sad thing is he's got the cash to do it. He can't get to it, unfortunately, personal matter. So I said, well, you do have silver right in, your back pocket, so to speak. Let's go to lunch today. I'll buy it from you. So I bought some. I bought some of his silver and bought him a couple, few Ethereum. So in my case, I did buy a tiny bit more silver. But as far as I'm concerned, I'm done. And I don't want to unload any. I want to just hang on to it. I don't want to buy more. I'm good. I'm happy. But I do want to focus on more of these cryptos and stuff. So that's kind of where I'm at. But if I was in a position where I didn't have that much silver or gold, if you're really a gold person, either or. But again, you know me, I love silver, and I give you all the reasons why I go for silver rather than gold. I believe there's way more upside potential when it lets loose. But if you don't have what you needed, what your goal was, but you do have some cryptos that made you a ton of money, man, get some precious metals and hang on to them. It has thousands of years of history as being a savior during financial, crises. So just wanted to get that out of the way. Take care.